CPA Advisory Show. I am Jeremy Wells, CPA, and with me is my co-host, Chris Ervishon, CPA. Good morning, Chris.
Good morning, Jeremy. What's up?
Well, I'm just thinking a lot about business model, revenue, pricing, all these kinds of things that I'm pretty much always thinking about, but there's been a lot of discussion lately about that, and I'm kind of hijacking the schedule here, the content schedule, and I'm making this show all about what I'm interested in today. So I hope you're okay with that.
Sure, let's do it. There's a lot to unpack there.
So there's been some discussion lately. You and I have read some stuff on Twitter. We've listened to some podcasts, and we obviously have our own thoughts about what is a bit of an issue within not just accounting, but a lot of professional services, and that's how do we price and get paid for the work we do. And I have not been running an accounting firm for long, but the whole time I've been running mine, I've used, whether I knew what to call it or not, I've used a model that has seemed to always work for me and seem natural to me, but isn't very standard across the industry. And even before I knew to call it a subscription model, that's pretty much what it was. That's the model that my mentor imparted on me. That's the model I started my firm with, and it's the model I've been using ever since. And it's essentially putting a monthly price on a relatively unlimited, and that word might get us into some trouble. We can probably discuss that later, but a relatively unlimited scope within the nature of what, I as an accountant can do for a client. And with the premise that if the client is happy with the work I'm doing and wants to keep paying me and keeps paying me, and there are no payment issues or no quality issues, or the client is responsive, the client doesn't have a problem keeping on working with me, then they keep paying me and I keep doing work for them. And that's a subscription model, right? If you think about things we subscribe to, like Netflix or whatever, then, if you want to keep watching movies on Netflix and you keep paying Netflix, they'll let you keep watching movies. And that's kind of the way I've always thought about running my accounting firm. But apparently this isn't the norm. So I'm pretty interested in this discussion, and I've gotten into a lot of discussions with other accountants about the pitfalls, the promises of different pricing models, of different billing models, of different ways of thinking about structuring the client relationship from the perspective of getting paid. So, yeah, that's pretty much what I want to talk about.
Yeah, I mean, there's a lot in there for sure, and I think that we have gotten, I don't want to say stuck, but I'll say stuck as a profession historically, just trying to pick up every last nickel, right? And trying to make sure that nickel is attributed to something that we are doing, and then making sure that if we are going to do something else, we're going to get another nickel for it. And I think that things are changing for sure, as you alluded to, and maybe that's the best model, maybe it's not, but historically that's what we've done, right?
Yeah, not to keep coming back to the same analogy, but the whole Netflix model, I remember when getting excited as a kid to go to Blockbuster on the weekend, right? And you paid for the movie, right? The VHS tape or then the DVD, and then you forgot to bring it back, and so there were more charges. Or with the VHS tapes, you forgot to rewind, so there were more charges, and then there were late fees if you didn't pay, and all this kind of stuff. And it was just a big mess, right? And the idea of Netflix, where you just subscribed and they started sending you DVDs, or now you can just log on and start watching movies. It's such a dramatic change in quality. And so the response from a lot of accountants, a lot of professional firms is, yeah, but you can't do that with services, right? Because it's not just sending somebody a DVD that's already been made and is just sitting there in a sleeve ready to be mailed out, or it's a movie that you just log on and all you're doing is just accessing that data file on a server somewhere, right? Like, real people have to sit down and do this work. And I get that. I get that. So I understand the perspective and the resistance to that movement to a degree, But at the same time, I do think that a lot of that is based on this antiquated notion. To me, it seems antiquated notion of, like you said, making sure that for every unit of work that we put out, whether you're measuring that in terms of time or in terms of deliverables or in terms of your own fixed costs, such as your payroll or your overhead, that for every unit of cost, you're accounting for that somehow with a with an equivalent unit of income, right? And so this sort of cost approach to revenue, it makes sense, right? Like you're guaranteeing your profit margin. I understand that. But at the same time, that's a purely internal way of thinking about pricing. And who's completely left out of that equation? Right? The client, the person that we're
Customer.
supposed to be doing this work for. And that's where it's never made sense to me. That's where time-based billing and even charging by the deliverable. I think in the tax world, the sort of next best move after you get rid of the timesheet, you get rid of time-based billing. The sort of next best option is the pay per form, right? And so if your tax return is more complex, meaning it has more forms, so if I've got to add a Schedule C to your form, if I've got to add a Schedule E for your rental to your form, if I've got to add additional forms, additional pages to the tax return, well, then that equates to me having to do more work to prepare that tax return, and therefore I should get paid more. And so, now we're setting a dollar value per form, right? A Schedule C is worth this much. I don't think that's true. I think one Schedule C can be worth
I
one
did
amount,
that.
and another Schedule C can
I
be worth a totally different amount.
Yeah, I did that when I first started, and I realized like this we should not do this. I did it for about 5 minutes, but when I first started, I had no idea how to price a tax return.
And I think that is probably the biggest hang up that a lot of tax and accounting, especially firms, have with this idea of subscription or something other than either hourly or per form pricing, is that you just don't know. You can't fathom a way to price a tax return, right? And I think there's a lot of things inherent to a tax return. One is the complexity, and not only does the complexity per return, like over each client, change, but then the complexity year to year changes. I mean, we know this over the last couple of years, right? A 2021 tax return for the same exact client is a very different thing from their 2020 return from their 2019 return, right? So that's one part to it. And the other part to it, to me, is that there's an annual cadence, which is just enough time for that client to go out there and do a bunch of stuff that they never told us about. And then it's February or March, and now here's all this extra stuff that's going to go into this tax return that we didn't know about. And so how could we possibly know how to price this thing, how to plan the capacity for this return until we actually get all of the information? So when are we going to price it and bill for it? Well, we can't do that until after we finish the work because we don't know how much work is going to go into it, right? I understand. I understand the logic of that approach.
I think you just made the point for subscription-based billing, because under subscription-based billing, theoretically, you're going to be talking to your client more frequently, and you're going to be asking the question, what is going on with you? What is new? And theoretically, the client will tell you, oh, just bought a house last week, or, oh, just sold my business, surprise, that sort of stuff. And so throughout the course of the year what you're getting into when it comes to be tax season. If you're just going to do it, yeah, if you're just going to do subscription, but you're never going to talk to your client and you're never going to ask them, how are you doing? What is new? And then you get to tax time. Yeah, there's going to be surprises for sure, because you haven't talked to that person.
This is why subscription approach to tax returns absolutely makes sense to me, but it requires a couple of things to go along with it. One, you have to be willing to communicate, and you've got to include that within the subscription, right? Throughout the year with your clients. And so to me, not only has doing the tax return on a subscription model made sense, but also having unlimited communication as part of that subscription, right? So, I've seen models out there where you put a client on a subscription or a fixed monthly charge, or however you want to charge them, um, but then there are limits around the communication component, right? You can, we'll only respond to so many emails a month, or we'll only take so many phone calls a month. Well, you're just telling the client, right, that you don't want to be bothered. If they've already asked you 2 questions that month, and then and they were relatively minor questions, but then they go out and they do something, like they invest half their life savings into crypto, or they buy a portfolio of rental properties, or they inherit something, right, and they have real questions about it that are going to significantly change their tax return. Well, they've already blown their 2 phone calls that month or that quarter or whatever, so they're not going to ask you. Well, to me, that's a big problem, right? So I don't want to put any limits. I, I don't like when professionals talk about their clients as if they were children, right? But I think the parent-child analogy is really helpful here. Would you put a limit on how often your child can have a conversation with you based on some period of time, right? Would you tell your child, you can only ask me questions twice a month, right? Of course not. You want that kid coming to you, asking you questions, trying to get help, trying to figure out their life, right? Whenever they have an issue. And I feel the same way about clients. I don't want to put any sort of limitations, any sort of restrictions on my clients in terms of coming to me. Now, the flip side of that is that I do aggressively block off time in my calendar. I use a scheduling service for them to schedule calls. I block off time to do email, so I'm not just sitting in my email all day. I think that's the flip side of the unlimited communication, as people think, well, then that means I'm just going to be communicating all day and I can never get any work done. Well, that's not true either. You have to manage your time, right? But you also can't start putting artificial limits on when clients can reach out to you in order to protect yourself. You're just making it harder. The other side of that is you've got to give yourself access to the data that you'll need to do that tax return. So if you're working with business clients like I am, like you are, then you've got to be doing their books, right? Like you've got to be, if you're working with S corporation clients, then you've got to be doing their payroll, or you've got to at least have access to their payroll through a payroll provider like Gusto or ADP or something like this. Okay, so you've got to make sure you have access to the data before you start that engagement. So I think it's not so much a question of, it's going to be too hard to scope out and capacity plan for the return. It's that you're thinking about this in terms of a single annual transaction and not an ongoing relationship, right?
So the way that we've handled that historically is we do have unlimited email communications for every service package that we have. So if you want to send us a question, send us a question. That doesn't get us the whole way there because a client may or may not reach out. Some people just, they don't think about reaching out to their accountant, which is fine. And that's, it is what it is. On top of that, we'll layer in, like on the lower end, we'll layer in 10 meetings a year. And the reason why I do 10 is because I think it's generally sufficient based on our experience that's enough to get a client through a year for the most part. We have clients who, like, they don't want to meet with us certain times of the year, like summer and winter, generally, like around the holidays and stuff like that. Those are low volume meetings. Like, people are just busy or doing something else. They're hanging out with their family. So 10 really will get us there. On the higher end, we do unlimited meetings. And we'll just say, hey, if you want to meet with us, then just here's the scheduling link, just book a meeting, and it's totally fine. So that's kind of how we handle that. But on the other end of that, like I said, we still need to be making sure that we're meeting with clients, that we're having these touch points, and we actually track when was the last time that we talked to this client. And if 30 days go by, we'll reach out, say, hey, what's up? Do you want to schedule a meeting? What can we talk about? Anything new? What's changed? All those good things. So we've actually flipped it back on the client, and then we're tracking it proactively. So we have that proactive reach out. And so we can get that information throughout the course of the year. Because even if you give a client an unlimited allotment of meetings, they still might not reach out to you. They still might not book that meeting. They still might not have that conversation. So, Jeremy, I'm kind of curious, like, how are you packaging your subscription models? Are you doing it separate from CAS and tax, or are you doing them bundled together? What does that look like?
I the first thing to understand when answering that question is, first of all, I am somewhat specific on the niche that I'm working with, the type of client that I'm working with. So, uh, what I'm about to say doesn't work for all types of clients because I'm not trying to work with all types of clients. I'm trying to work with a specific type of client. My type of client that I'm trying to work with is a small business owner. Right? So typically, I'm working with a solo owner of a small business that's either a complex enough sole proprietorship or small partnership that they need books, they might have a couple employees, so they need some payroll, or an S corporation owner. So they definitely going to need books and payroll, even if it's just the operator as the sole worker within that business. So that's my typical client. So I'm trying to think about what is that client really going to need, and this is where I start. Right, this is the base package. Is what does that client need from my professional perspective? This is when we have to be like doctors. We have to be like MDs. We have to say, if this is the kind of patient that I'm going to work with, then I know that this patient is going to need at least this prescription, this procedure, right? Like every time they walk in the door. And so, what's the bare minimum? The bare minimum is obviously going to be an annual individual tax return, along with a business return, probably if there's that partnership or 1120S for the S corporation. Even still, if it's just a Schedule C on the 1040, I treat a Schedule C like a business return because it is, right? And so that's all going to go together there as far as the annual tax return component. And yeah, that's included in their subscription. Because to me, everything else that's included in this is just the result. It's a reconciliation of all the rest of what's included. It's not some special separate thing that I need to think about separately as far as capacity goes, as far as pricing goes. So what else goes along with that? Well, in order to get those tax returns done, you brought up the regular meetings. I have as standard in all of my subscriptions, an annual tax planning meeting, right? So this is going to be that one opportunity, and this is what I'm really pushing out there to every client. Hey, schedule this. I have a special dedicated link that goes to my scheduling page for a specific type of appointment. That is the annual tax planning meeting. If I have sufficient information, I will run a tax projection for that meeting. And so that means I'm doing their books, or at least I've got the last year's information from the last tax return I did. So I'll roll a lot of that over. If they give me updated information, like an updated pay stub from a spouse or something like that, then I'll change that information. Or if they tell me, as they're scheduling that meeting, I've got a list of things that I'm like, hey, if any of this changed from last year, let me know. If you sold a bunch of stock, if you moved and sold your house, if you sold a rental property, if you did any of these kinds of things, let me know, and I'll factor that into the projection. And so that really becomes the core of what we discussed during that meeting, is the projection, what the tax liability is going to be, and then maybe go through a handful of tax planning strategies that we could to bring that down. Unlimited communication, like I said, I started off as an enrolled agent. From as long as I've had my firm, I've been an enrolled agent because I knew that if you're helping clients with taxes, then they might get into tax trouble, or they might get notices from the IRS, even if they're not actually in trouble. And so being able to help clients with that has always been a focus in my firm. And so I've always included what I call representation. Now, representation means different things to different people. I'm not actually doing any resolution work. I'm not doing any kind of like offering compromise work or whatever. But yeah, if a client gets a notice, I want them sending that notice to me. I don't want them calling the IRS on their own behalf. I don't want them trying to write back to the IRS. I take care of all that for them, because a lot of times, there are stories out there of clients who say they got a notice and they just went ahead and paid it, right? And they moved on. that might have been a mistake, right? There might have been a better way to do that. We've got abatements, we've got negotiating with the IRS. We've got a lot of different things that we could potentially do depending on what that notice says. And then sometimes the IRS is just wrong; they haven't collected the payment yet, right? And so now you've sent in a duplicate payment. Maybe they applied an estimated payment to the wrong period. All these different kinds of things. I want to handle all that on behalf of the client, right? So I always include representation. And then for the business clients bookkeeping, over the last year or so, I have decided to make that mandatory, where not only do I require bookkeeping, but I do the bookkeeping. And I also pay the QBO subscription, right? I pay the QuickBooks Online subscription because it's one more thing that I don't want the client to have to worry about. It's one more source of friction. If I tell them they have to pay for it, they have to set it up, they have to do all that. I don't want any of that. I set it up for them. I've got a workflow in my practice manager that kicks off as soon as they sign up, and we set up the accounting system for it, and we get them going. If they're an S corporation, if they have employees, we'll throw in payroll for the owners, right? If it's an S corporation, and that's really the basic tier, right? And that's a lot. I think that's a lot compared to what a lot of firms are putting out there. But that's my basic tier. Now the higher tiers, I'll put 2 higher tiers on top of that, and that's going to be based on all the extra stuff. So if you got more employees and you need more payroll, if you want to meet more frequently, if you want to have quarterly or monthly meetings with me, if you want me to do more of the CAS kind of work, like the budgeting and forecasts and more frequent projections, we can do all of that. And for, again, one of these things that I know is going to come up within the kinds of clients I'm working with is even if they don't have any other employees besides the owner, they're probably delegating a lot of that work out to contractors. And so helping them keep up with the small, regiment of contractors that they're assembling, tracking how much work those contractors have done, how much those contractors should get paid, making sure that the 1099s get filed for all those contractors. That's another component that will add into a higher tier as well. So that's what subscribing to my firm looks like. And I've been doing that at that kind of level for over a year now, and the basic sort of tax work included since I started my firm almost 5 years ago. And I haven't had a problem with that since.
And we're very similar. But what I heard you say is that you do not do subscription tax without also doing the accounting, correct?
Correct. And so the accounting, right, the actual bookkeeping, the categorization, the reconciliation, all that kind of stuff, that's at the basic tier. If you want what we're referring to as the CAS work, the above and beyond bookkeeping, then that's one of the higher tiers. Because, I found that a lot of just single owner S corps, they don't care, right? And it's not necessarily helpful to them. And so I would much rather be having conversations with them about what the numbers mean that they want to have rather than forcing CAS down their throat. But if they want that, if they want the budgeting, the forecasting, then all that's on the table at a higher tier.
Okay. Here's a big question for you. Can you do subscription without a niche?
Absolutely. Yeah, I think you absolutely can. Will it be successful?
So let's unpack that, because I think
will it be successful, right?
All right.
And I think this is where we start getting into problems, right? Because so many accounting firms don't have a niche, right? They take whatever work comes in, or you go onto an accounting firm's website and you look at the who we help section, and it's 12 different industries, right? That are all completely different. That's problematic, right? And so I wouldn't
12 industries for a 5-person firm.
Yeah, right. Exactly. And I would not, you start to get to know a CPA and you ask them what they specialize in, and 20 minutes later, right, they're still listing things off, right? That is when I would say, no, let's clean up your business model first, and then we'll start thinking about subscription. So I think this is not a one size fits all model. I think anybody could try it. Now, whether they actually succeed with it, I think there are some other things that need to happen first. One of them is having that clarified niche, for sure.
Yeah, I think it's a good place to start, or at least a good place to migrate to. I think it makes everything easier, especially around capacity planning. And you can start to anticipate what your clients are going to need, because they all kind of fall into a general bucket, at least relatively closely. And the way that we do capacity planning around this is we have recurring, what we call tasks. and we have what I call a tasker inside of our firm. So we map the engagement letter to something that's it's basically a very large Google sheet, and then we have an automation that runs on top of that, and it creates tickets. We use a ticketing system just like like an IT help desk would, and we map the engagement letter to that, all the recurring work, so we know when it's coming, and we can kind of predict that. And we have basically just average amounts of time associated to those things. So on average across our entire client base, how long does this thing take you? So when we're doing weekly bookkeeping, we know that, and this is not even the actual number, but let's just say it's going to take an hour per client. So we know that, and we know that it's going to come out on Tuesday and it's expected to be done by Friday. Okay, so we can kind of plan out that time. When we forecast out how much staff time we're going to use, we want to be somewhere in the 60 to 70% neighborhood on average. And then we forecast out 90 days. So I can see, all right, well, the 4-day average is going to be at, I don't know, 100% and it kind of stays there. Or the 4-day average is going to be at 50% and it kind of stays there. Or the 4-day average is going to be at 100% and it doesn't go away. Okay, now we've got a problem. Do we have a workflow issue? Are the average times that we've associated to these things, are they even remotely correct? Do we need to hire somebody? Do we need a different process? Like what is going on here? It just starts a list of questions, right? So we're not time tracking by any stretch of the imagination, but we're just taking a wild guess. Like this is how much time this thing might take. And then these are all of the things that this person has to do. And that's our capacity planning. It's no more complicated than that. Putting that together was super complicated and it was a huge project for us, but that's the way that we're thinking about it. So to some extent, we do think about it in terms of time, but only to try to figure out like when we're going to need to hire and when problems are going to happen and what not level of talent we need to hire, but what specialized talent we need to hire. Do we need to hire somebody who's a bookkeeper? Do we need to hire somebody who's a tax person? Do we need to hire somebody who's a CFO? That sort of thing. So that's how we do capacity planning. And the tax stuff is lumped in there because that is recurring. We know that we're going to be calculating quarterly estimates. We know that there's going to be a business return. We know that there's going to be a personal return. And we lump all that in there, and that gets factored in the capacity planning as well. And we're just taking averages. It's very much that insurance model that Ed Kless and Ron Baker talk about. Like on average, is every client going to take us an hour to do the bookkeeping, for example? No. Some of them are going to be 15 minutes. Some of them are going to be an hour and a half. But on average, we think that this is kind of where we're going to land. And it's a very imprecise thing. It's a guess. And we want the guess to be directionally correct so we can flag problems internally before they become problems. And then we also want to leave some excess capacity. So we don't want anybody to be, really above 70% utilization from just a modeling perspective. So we have that time to answer those questions and to take those meetings that we just talked about, a little while ago that are going to come up and reach out proactively and say, hey, we need to have a meeting, but having space open for that team member on their calendar to actually have the meeting because they've got the time and they've got the capacity. So that's the way that we're thinking about it. I'm curious what you guys are doing, Jeremy.
Yeah, it's very similar. So the proposal and billing software that I use, which is Ignition, formerly Practice Ignition, ties in with the practice manager we use, which is Carbon. And so when a client signs up and they have a certain list of services that are attached to that agreement, then work assigned to that client for each of those services is automatically created in Carbon, right? So we know the work that has to get done as soon as that client, that prospect signs up as a client. So that's how we're tracking, the incoming work, and then we go in there and we change that around. I also keep up with a spreadsheet that breaks down the work. So I assign specific clients' monthly accounting work to a certain bookkeeper, right? So I keep up with that internally, and I sort of grade each client based on complexity, right? This is something that, I picked up from tax software, right? So I've seen tax software that will give a return a complexity score. And that's something that I kind of sort of adopted for the bookkeeping work as well. So if I know a client is a little bit more complex, they've got more bank accounts, they're invoicing through QuickBooks. And so we've got to be reconciling the deposits with the sales and, all that kind of stuff. They've got a lot of contractors that we're paying through QuickBooks. They're also running payroll for multiple employees, right? then
What's
that's
the
going to
software that does the complexity score?
uh, UltraTax is the one where I seen it.
Okay.
UltraTax is where it'll give you a complexity score for the tax return, right?
So you've
But
kind
I
of
sort of
modeled that out separately?
yeah, so I kind of took that idea, right, out of that tax return software and thought about it in terms of running my own firm, right? Because to me, capacity planning is less about time, like the actual person doing the work time, and more about the overall complexity because there's a relationship there, but it's also going to be more time from everybody else in the firm as well, especially me, right? Because if it's more complex, it's not just that it's going to be taking that bookkeeper longer to do that work, but that bookkeeper's probably going to have more questions for me. There's probably going to be more questions for the client. There's going to be more transactions we're sending into uncategorized, right? The uncat going to the client, and then the client is going to be contacting me to say, hey, we already talked about what this transaction is, or here's the documentation of what that transaction is, because that's where we had this big transaction come through, or we need to split that transaction because it's actually for these three different things and we did a lump sum payment, right? It's all these things that, yes, it adds time, but it adds time not just to the actual bookkeeper, it adds time to the entire firm, right? And so to me, it's less about how much time should it take you to do this thing on average and how complex is this for the firm as a whole, right? And I think that's true of any firm. I don't care how much you've scaled things and how many layers of management you've got. You're adding those additional layers because each layer is going to get more work with a more complex client, right? All the way up to the top. Even if you've got 3 or 4 layers between you and the bookkeeper or the tax preparer, well, if it's a tax return, it's more questions for the tax senior, which is more questions for the tax manager, which is more questions for the partner, right? And all the way back down the chain. So to me, complexity is a good way of thinking about that. My firm's nowhere near that complex, so this is all just kind of theoretical to me, at this state. But it seems to be a good way, and when I've used that to spread the workload across multiple bookkeepers, you might look at it and say, well, this bookkeeper has 20 clients and this one has 10. That doesn't seem fair. It's like, yeah, but out of that 20, 16 of them are simple, right? And for the one with 10, 8 of those are complex, right? So it's more clients, but less overall complexity, right? Less average complexity. And so that's the way I think about divvying up the work among the staff and thinking about these capacity planning issues. So the more simple or the more complex the accounting work, typically that's going to roll over into the way my clients are, the way my firm works. It's going to roll over into the tax return, right? If the books were simple to keep up with all year, then we can probably just roll that data from the year-end financial statements into the tax return and do a relatively quick review, throw in a little bit more information that we know from the client, and then we're done, right? Whereas a more complex bookkeeping, right, where we've got multiple different kinds of activity, multiple revenue streams, we've got payroll, we've got contractor payments that we need to reconcile to the 1099s, all these different kinds of things. Well, now the return itself is more complex too, right? Because we need to do more year-end work to get the return done. So again, it's this notion of, if you know the work all year long, if you're doing the work all year long, if you're staying in touch with the client all year long, then it's that much easier. It's not more difficult. It's easier to project out and plan for the capacity of the tax return, right? Because you're looking at the complexity all year long and you're resolving a lot of the complexity all year long. So again, I think it's a bit of a cop out, right, to say that tax returns are this different thing. They're annual, they're complex. The client can do a lot of stuff throughout the year, and therefore the tax return needs to be this separate thing.
So I would kind of offer two things on the back of that. One is that as you go up the proverbial food chain in the firm, so the seniority levels, that the higher you go, the more excess capacity that you should have, for exactly that reason, because capacity is going to flow uphill. There's going to be more questions. So I would think about it that way, and we do think about it that way. And then the other thing too is that if you structure your tiers, so if you're doing tiered subscription-based pricing, theoretically, clients who take tier 1 are going to be less complex than clients who take tier 3. And you can kind of divvy the work up that way. The way that we think about that in our firm is probably 30% of our clients are going to be tier 1, which is our lower tier, probably 60% plus or minus are going to be tier 2, and then probably 10% are going to be tier 3. And then we spread the work out across the team so that there's not a standard level of complexity, but at least so that we understand the level of complexity, because again, that complexity is going to flow uphill. So what do you think about that approach, Jeremy?
And I think that, to me, from those who have concerns about capacity planning under a subscription model as opposed to a different pricing model, if we sign up clients to subscription and we are offering these, quote unquote, unlimited services along with them, well, then how do we plan for capacity with that? I think that right there is the answer. You know what clients have signed up for, right? And therefore you should be able to project out the capacity. It's when you're using a different model, such as, especially with time-based billing, right? You can always agree to do more work for the client, right? And you can bring on more engagements. You can sign up more clients, sign up more work for yourself with this false security of, well, we're just billing it by the hour. So if we need more time to do the work, we'll just take more time and then we'll bill for more time, right? But you very quickly can completely lose track of that because you're just tracking it on the back end. You're not doing anything to plan for it on the front end. Now you can sit there and say, well, we know how many hours we've estimated out and all that, but you still don't know how many hours it's actually going to take. Now you don't under any pricing model, right? But at least under the pricing model where you are accounting for complexity using a tiered pricing system or using a subscription pricing system, you can plan for, with some relative certainty, right, the level of complexity that you've agreed to. And therefore think about, how many clients do we have at that top tier where it's going to be the most complex? How many clients do we have at the middle tier where it's going to be a little bit less complex? And then you can use that as a gauge, right? You can also use it, as you're talking about, in terms of the specialization. If you have clients that start signing up for your tier 3 service that includes some sort of function or service that you don't have people in place to actually do, and so that work is going to fall on you, that's how you can start thinking about your next hire, right? Is, we've signed up people to tier 3, which includes this thing that I'm the only one that's certified in, or I'm the only one that's trained in. I don't want to be doing this work. I need to hire somebody that can cover that, right? So again, I think
that's the pain point that we're going through.
I think capacity planning is a lot easier, not more difficult, right, when you have this subscription model.
Okay, so we've got 5 minutes left. You mentioned time tracking, which, I don't know, maybe it's a personal goal that we bring up time tracking in every single episode for forever, just to belabor the point. But where does time tracking live inside of a subscription-based model? My opinion would be that it does. There's no place for time tracking. That's my opinion, and it's just my opinion, right, wrong, or indifferent. But we found that we don't need to track time. Like I said, we take these averages, we forecast out capacity planning based on that, and then we ask the question, does this feel about right or not? And then we adjust from there. And I can kind of see where my capacity is going to be, as the leader of the firm, and the inherent bottleneck, hiring out the things that I do, over time, and that being where we've been focusing. But we don't track time. We just try to figure out, are we profitable? And if the answer is yes, that's good. Are we within the range that we wanted to be in? If yes, then that's fine. And then we can have discussions after that. There are going to be some clients who overutilize, air quotes, our services. There are going to be some clients who underutilize our services. Whatever, it averages out. There are some people who have property and casualty claims every year. There are some people who don't. There are some people who have auto insurance claims every year. There are some people who don't. Under that model, my property and casualty insurance for the last, decade has been 100% overpriced. But it is what it is. I pay for the peace of mind. Same thing under subscription model. I just don't know where time tracking, or the need to do time tracking, really falls into that.
I don't think it does either. I think the only time where I have ever done any kind of time tracking has been using some sort of passive software on my computer that I can just log into and see, this is how much time I spent using Chrome. This is how much time I spent on this website. This is how much time I spent doing that. And that's interesting information to kind of review, but it's never anything that I would build a business on. It's never anything that I would think about changing my business model around, or especially think about using that to define the relationship that I have with a client. So I have never tracked time. And I think two things. One, if you're worried about a client abusing, access to you and your time, then think about changing the nature of the relationship with the client, right? In a positive way. If they're abusing your time, asking a lot of questions, and figure out ways that you can get ahead of them, be proactive, right? Build a knowledge base, start writing content that answers those recurring questions. Put together some video courses that you can send to clients, right? And then when they ask you those questions, refer them to the content. Don't spend time in email trying to answer the question, or on the phone trying to answer the question, right? Get ahead of them on that. The second thing is, if you're worried about time utilization within your staff, is our staff working on the right stuff? Are they spending too much time working on stuff? Talk to them. Have conversations, right? The people who understand your clients and your clients' demands and the need for additional services for clients, or different kinds of services for your clients, the best people to have conversations with about that is your staff, right? Just go talk to them. Are we doing too much work for this client? Is it taking too much time to do the work for this client? We haven't gotten their monthly close done on time for the last 3 months. What's the deal? Just go ask your staff person that, not in an accusing you're not being productive enough kind of way. In a, like, what can we do to help this client and get this stuff done on time? Do we need to add another bookkeeper to this file? Do we need to restructure the engagement with this client? Just be proactive and be positive, right? It's not that difficult.
Two things that we didn't really mention. Number one, bringing on the right client. So clients who are going to pay your fees, clients who are going to be responsive, clients who actually want to talk to you. If you don't bring those types of clients on, it's going to be really, really hard, because then you're not getting that information throughout the course of the year. You're not getting the fee that you need. And then number two, your fees need to be high enough to allow you to have that extra capacity, to allow you to have that extra room where you can actually absorb the extra work that may come from a client or clients from time to time, and so that you can also pay your people and have the level of staff that you need to actually make this work. So if your prices are too low, it's going to be a struggle as well. And if you're bringing on the wrong clients, it's going to be a struggle as well. That comes from experience.
And there's a strong correlation between those two things, right? There's a strong correlation between not charging enough and having the wrong clients, right? Absolutely. We all learn
absolutely.
That the hard way.
We don't need to serve everybody.
Absolutely. And we don't need to be offering discounts trying to get people in the door. For sure.
No.
Cool, Chris. Well, thank you for your patience and going along with me on this one. Like I said, this has been a topic that seems to be discussed out there for a while. It's something that within my own firm, I've never had to really think about. And so I'm just thinking about this from the perspective of what seems to be a lot of resistance, to these ideas and these ways of doing things that just seem pretty natural to me. Yeah, I definitely think if you're not using these kinds of models, don't roll it out lock, stock, and barrel to your entire client base. I don't recommend that. But do start thinking about what is really keeping you from thinking about implementing that. Is it your fundamental disagreement with the pricing model, or is it just thinking that you couldn't implement it in your firm because of X, Y, and Z? And then start focusing on what X, Y, and Z are and start thinking about those, right? This might not be the podcast that gets you to finally switch over to subscription billing, but it might be the one that gets you to start thinking about what are the things holding up progress in your firm, right? And that's really what would be a positive move for you, is thinking about those little things you can really start working on today, even if you don't change your billing process or your pricing model. Cool. Thanks, Chris.
Thanks, Jeremy.
Good deal.
See you on the next show.
Appreciate it. Hey, it's Jeremy. Thanks for watching the CPA Advisory Show here on YouTube. If you enjoyed this episode, please subscribe, like, and leave us a comment. We'll probably read your comment on the air. Be sure to follow us on Twitter at CPA Advisory Show. And if you have an idea for a topic or guest you'd like to see, email us at host@cpaadvisoryshow.com. Thanks for watching, and we'll see you next time.